Hello investors and traders, today I'll speak about 5 dividend stocks, top 5 dividend stocks to buy right now. Most of the stock will be a Dividend King. So I remind you that Dividend King is a company which increases dividend payment for at least last 50 years. So today we'll speak about dividend investing, passive income, and of course a nice Dividend Kings, Dividend Aristocrats to buy right now. So let's start with the first company. It's 3M company. It's a producer, manufacturing, industrial conglomerate. So let's have a look on its chart firstly. So look, in my mind here it was an impulse. The green one, it was the first wave, the second, the third, the fourth, and the fifth. Usually, by the way, the third is the largest wave in the impulse. So here it looks very organic, and if we may also look more closely to this wave, the third, it can be also reflected in this way: the first, the second, the third, the fourth, and the fifth. By the way, here also we may see a rotation rule. So usually the second and the fourth wave, one of them is a flat one and the second is sharp. So here we see a sharp correction, and here it's more flat one. So the impulse finished. Now we have ABC correction. Usually, by the way, the correctional wave finished at the previous fourth wave on impulse. So here also the probability of this marking is elevated. So I think here the wave A is finished. Now we may see a bounce at wave B, but there another decreasement in wave C. Also I can give you the hint when we may see the bounce of this wave B. Usually it can be about 30 to 60% of wave A. So in this case, using the Fibonacci levels, let me check what can be the targets. So here, look, it can be right here, 30 to 60%. So in this case, it can be a bounce to these levels. Yeah, this one. I think we may see the potential bounce about 160 to 180. So in this case, the potential of growth is about 40% for this stock, for 3M. And by the way, of course, we have a dividend yields of more than 5%. It's very nice dividend. It's even higher than the US Treasury bond. US Treasury bond now is 4%. Its yield, so of course it can be a very nice investment. If we look at the momentum indicator, the RSI, look at the monthly time frame, it's 34, so it tells us the stock already oversold. So of course it can be a nice time and nice level to buy a 3M stock. Also, let's have a look on fundamental parameters of 3M. So we see the total score is 84, is quite high, quite rank. The financial stability, debt to EBITDA ratio less than 2 and risk coverage about 10. So very high debt coverage. Any problems with that in my mind? And ultimate score about 4. So the probability of default in the future years is very low. So I think that the financial stability, financial position for this company is very strong. The marginality, we see the gross margin 43, net margin about 17. So also marginality for such company, for such industry is very nice. And look, the last 3 years, the growth revenue and EBITDA was about 4%, and the future we see a slight, very slight growth expected in the future years of EPS, earning per share, and the revenue about 1%. The valuation now, P ratio about 11. I remind the average for S&P 500 is 15, so it's little cheaper than the whole stock in the US market. NPS ratio about 2, so also I guess it's very low valuation of this stock. Also, we can see that any problems with liquidity for this company, the current ratio is 1.5 and the quick ratio also about 1. So the liquidity position, liquidity ratios, parameters for this company also very stable. And of course, it's a dividend company, dividend paying company, so dividend yield is 5.4%. We see the dividend increase track record is 66%, so it telling us this stock 3M company is a dividend king. The 3-year dividend growth is more than 1%, and the payout ratio about 60%, so 60% from its net income company pays as dividend payments. So here I see a room even to increase it dividend payments. There is no doubt that the company will continue to pay it dividend payments, and of course the company most probably will continue to increase it dividend payments. So 3M is the first company for today. Generally speaking, a nice dividend yield. Let's have a look also the PS ratio, price per share. We see now it's the lowest value for last I guess last 7 years. It was 4, it was 3, now it's only 1.8. So the PS ratio very nice, nice dividend yield, great valuation, and the momentum indicator. So generally speaking, the fundamental and the technical analysis telling me that now 3M company can be the best buys for now. Let's move to the next stock for today. It's J&J, Johnson & Johnson. So it's a healthcare company. Generally speaking, if we look at the weekly time frame, so here look, we traded at a increasing channel since 2020. Now the momentum indicator is at the lower border, so RSI is 31. It's telling us the stock already oversold. By the way, now we traded at the levels of the pre-coronavirus crisis, so nice level to buy the stock. Let's have a look here. The dividend yield is about 3%. So I think JJ now is very interesting for me stock to buy. Let's have a look on the fundamental parameters. The market cap about 400 billion bucks, so it's a huge company. We see the revenues continue to grow on the early basis, annual basis, and the marginality last data for last year is 19%, so it's quite impressive and quite nice for such a company, a healthcare company. Usually it hasn't this industry hasn't not so high marginality, but now we see the J&J has a maybe marginality like Google, like Apple, around 20%. Let's have a look about the expectations. The EPS, earning per share, in the future quarters expected to grow. The revenue also, the last quarter it showed the company earned 23 billion bucks, and also it will be in the future quarters expected to show very stable results. If we look the dividend history, so last year's the dividend yield about 3%, 2.6, 3%, and 2.5. So very stable dividend payments. And of course here we see that 61 years of dividend increasement, we can relate Johnson & Johnson to a dividend kings. It's more than 50%. Even now dividend yield 3%, and of course the 3-year dividend growth about 6%. So also Johnson & Johnson, it's a nice company to buy right now. Nice and great dividend payments, good momentum, and of course the marginality for me for this industry is very impressive. Let's have a look at the third stock for today. It's ABBVIE. It's a healthcare company. So look here, as I see, it's traded an increasing channel. Now we traded at the lower border of this channel. So most probably we see the stock a little bit lower. Maybe the target can be at least 175. The dividend yield about 4%. Let's have a look on the fundamental of this stock. We see that the revenue continue to grow. It's grow year to year we saw an increasement in the revenue every year since 2018. The last data for net profit margin 20%, so very impressive figure, and the market cap 276. So for me also it's a nice dividend stock to at least to consider right now. The dividend history of this company is very rich, 51 years of increasing dividend payments, so it's a dividend king. The now current dividend yield about 4%, and look, it's also can be very attractive for dividend investors. The 3-year dividend growth is more than 9%, so of course it's a very interesting dividend stock. The next stock for today is Coca-Cola. Of course it's a dividend stock, very known, very famous one. Its current dividend yield about 3%. Let's check its fundamental parameters. Generally speaking, we see its revenue continue to grow last 5 years. Last net profit margin 22%. Market cap is more than 200 billion bucks. And generally speaking, I like Coca-Cola. Let's have a look on its dividend history. We see that historically, dividend yield was 3%, 3.3%, and for the last years it's about it's about 3%. The earning of this company, let's have a look on on an annual basis. We see expectations, EPS, earning per share, expected to grow, and also the revenue. If 2022 it earned 43 billion bucks, so 4 years from now expected to earn even 51. So the revenue most probably for this company will continue to grow. Let's also check its dividend history. So we see that the 62 years of increasing dividend payments, so it's also another dividend king in our video today. Dividend yield 3%, and the company of course continue to increase the dividend payment more than 3% in annualized 3-year dividend growth. So Coca-Cola, it's a traditional dividend paying company. I remember that Warren Buffett likes so much this company. So for me also it can be a nice company to hold in your dividend portfolio. And let's move to the next company for today. It's Altria, it's tobacco company. So look, if I'm not mistaken, it's called Marlboro, the brand of Marlboro. Dividend yield is more than 8%. The technical analysis using the Elliott waves. So I think it is not we have an impulse here. The first, the second, the third, the fourth, and I'm expecting to see another fifth wave. So in this case, we may see Altria higher than 65 bucks. So the potential to grow is at least 60%. And don't forget, of course, about the dividend yield more than 8%. So also very attractive and very impressive. Let me check the weekly time frame. Now we are traded in flat, but my target is about 80 bucks. So yes, Altria. Also, it's a nice dividend stock to buy. Look here, the last 3 years the marginality is very stable. By the way, the last figure of net profit margin is 27%. So great figure, very impressive for me. And also, if we'll check the PS ratio, price per share, so now it's only 4. historically we saw it was 7, 6, 5. Now it's traded not far from the levels of coronavirus crisis. So PS 4 for net profit margin, it was about around 30. So now it's I think the stock is fair valued. So it was my view, my analysis for 5 dividend stocks, 5 dividend kings and dividend aristocrats to buy right now. If you like this video, of course, press the like button. Don't forget to subscribe to my channel, and see you on the next time. Bye.